Well, here we are. How exciting is this? I've got a special episode of Beers with Rich for you. I'm Rich, editor of Under the Radar Report. And this week's beer is powered by nuclear energy. I think you'll like it. And it's also powered by Prancing Pony Brewery. I mean, look at that. Look at that. It's got everything but the kitchen sink on this label. It's from South Australia, so it must be radioactive. Wow. Here we go. Let's try it out for a winter's evening. Oh, let's see how it explodes. It's interesting. It's no Southern Highlands, but let's give it a few more chances. Well, let's face it, they don't mind a beer in Glasgow, do they? Seriously, the big news out of COP26, which you won't hear from mainstream media, I don't think I've ever said that before, is that nuclear is well and truly on the agenda. Certainly just looking at these nuclear-powered stocks, these uranium miners, that's clear. The nuclear penny has indeed dropped. Basically, the world is working out the only way to maintain energy consumption, reduce carbon emissions without some miracle technology is through nuclear energy. So all the big companies are embracing it, but one in particular I noticed was Japan, which is amazing because like Fukushima was just about almost exactly 10 years ago, and they've been touting hydrogen as the next big sort of energy in that place. Was supposed to run the recent Olympics, but clearly the focus for the new Prime Minister Kishida Fumio is nuclear, and that's what he said. I mean, all these countries are really scrambling to make their emissions targets. Now they're scrambling to get nuclear energy because it is the technology that matters. So renewables are intermittent, as we all know. The wind blows, not all the time. The sun shines, but not all the time. Batteries are good for storing energy, but they're pretty short duration. Like a large-scale battery might have a full power, at full power for like 90 minutes. That's a bit short for a factory of any size. So we've been promoting uranium stocks, Paladin Energy, Bannerman, Boss Energy. They've more than doubled in the past 6 months. So, let's have a toast to that. We're coming out with another one next week. Double toast. Yes, people, nuclear is powering Under the Radar. So, as I've said, these stocks have doubled, but it also begs the question of knowing when to get off that bus. And I want to talk quickly about that because I think that's as important as knowing when to get in. So this was highlighted this week where we covered shade cloth manufacturer Gale Pacific, which has been one of our long-term favourites, and we put it into a lot of dividend portfolios because they were quite a consistent dividend payer. But then, alas, in their last results in August, we noticed that cost pressures were rising. Like basically, they've got this growth that's coming out of, they've got a manufacturing facility in China. They've got growth in the US, in the Middle East. They've got global growth, particularly in the US. But the cost pressures are really starting to, weigh on them. The much sort of talked about freight costs, and just general costs of labour. So basically, we decided to get out of Gale in August, and now the stock has gone from 43 cents to 28 cents. That's down 36%. That's a big fall. And I guess what this puts into sharp relief, not only that dividends can't save you, but also and the fact that Gap has a strong balance sheet. But, what it puts into sharp relief is the cost pressure or the inflation that we're seeing. So I think, hunting for growth is important, as I keep saying, but also what you want to do is have protection because we can all see, inflation ahead. That's why, we like regional banks, MyState, Auswide, as well as the big supermarket retailers, Woolworths and Coles. I mean, you want protection in your portfolio alongside some of those high energy stocks. Um, I mean, you know, on those high energy stocks, they're not going to be producing anything for some time. So you want to have stocks that can be ballast for your portfolio, like stocks that have a franchise, that aren't price takers, that are price makers, stocks that in short can pass on costs. So that's a great inflation hedge. But what we're also talking about with equities is looking ahead of the curve, which is why we focus on disruption. So this is where nuclear fits in, but also a lot of small caps that we cover on the hydrogen front. For example, I was just looking at Hazer, which I just mentioned earlier. That's up 336% or something since we covered it 2 years ago. So disruption's a big factor. The point is that of all the asset classes, equity markets move based on the farthest ahead. So the future is more important for the here and now in equities. And that's why next week's really exciting. We've got another nuclear stock. We're celebrating a decade of running our portfolio, in which we'll be discussing those sort of factors of risk and how you can minimize your risk. So it's all systems go, and let's have another toast to the prancing pony. Certainly it hits the spot, the prancing pony, when your stocks go up. Here's to stocks going up, and here's to dividend protection and protection of all sorts.